Everything you see here is strictly informational. Forex is a high-risk business. Please do not place trades with more money than what you don't have. Please do not trade other people's money. Do not borrow any money than what you cannot trade with. And please take everything that I say as a personal opinion. I am not considered a financial advisor. I'm not considered a broker. I am just one here simply recording my journey along learning the markets.
All right. It is another week and another dollar for most of you, or hopefully most of you. If you ain't making dollars, then I don't know what to say. But last week was NFP week. For me, I stayed. No, I was in it for somewhat until some things were called, and then I had some profits, and then I jumped out before it got too crazy, just so I didn't save myself from any crazy losses. But sometimes, there was one time I wish I would have slapped myself in the face and stayed in it, because I could have made a lot more. And this is not advice for anybody to go out and put in their own money. This is just my outlook on how the week is going to go, versus how I thought, versus last week was going to go. And I'm going to focus on a couple different pairs. If you've never seen my videos, I kind of do analysis of, the Forex market. Sometimes I'll do some indices, maybe some metals like gold. But I think I'm going to go over a little bit of gold today. Primarily, I've been focusing on the fiber, the euro, cable, the GBP. I'll go a little bit of a gold, and I'm also going to go over the CAD. Mainly because I think there is some discrepancies in some of these, and I think we need to take a look and see what's going on. First and foremost, I found some cool what do you call them, indicators that you can use. It's just that I've been using, especially when I talked about one of my last videos about using the COT report. There's actually an indicator that has the COT report on it, which is phenomenal. So now I can just have that right on my trading view instead of having to go to bar chart. But I do go to bar chart for other things. I go to bar chart for interest rates, which I find is definitely a need to have. Especially if you're going to try to predict, price action and the next kind of big price movement. If you're trying to find out which way the market is going in a macro view, which is more of what I've been focused on, rather than trying to figure out, what the next trade is. I try to figure out where the direction of the market is going as a whole. That way I can trade in that direction. So first, what I want to do is get my charts aligned here, because evidently they are not aligned at all. Yeah, there we go. Got him. I think I got him up now. Give me 1 second. Let me make sure. Sometimes I don't check myself before I wreck myself, I just go do things without checking. But anyways, it looks like I do have pulled up, and here we go. First, we're going to check out the EURUSD. Right now I'm on a 4-hour view. I've got it. These purple lines are mapped out the last 2 weeks. So if you remember, these last couple of months, we've just been kind of going in a sideways motion. And then all of a sudden, 2 weeks ago, the bottom dropped out. Now, if you go look at the daily chart, and you go back quite some time, all the way back to probably around March. You can see down here I have the COT indicator down here. So the COT indicator indicates what the commercial banks are doing and what the large speculators are doing. So large speculators are people with large accounts, hedge fund managers, things like that. Your commercials are more like your Bank of England, your Dutch bank, your Federal Reserve. And these are their net positions, whether they are long or whether they are short. Now here in the EURUSD, as you can see, the commercial banks, and if I pull up the indicator here and you go to style, you see the red is indicated as commercials, the green is indicated as large speculators. You can see that the red is net short and has been net short ever since basically COVID. So what I have been doing is I've been kind of pulling fibs and kind of speculating on where, if they started going net short, and when they probably started going net short, wherever this crossed over, probably at the very top of this, this high. So if you want to pull a fib from here to this high, right? And they're going to be going short this entire time. How are they going to make their money, right? So, well, and then here they're going short. Looks like they had some long positions in through here. Here they go more net short, they increase their long positions here, more net short, increase some longs, and then they go more net short. And then now they're increasing their long positions. So, which tells me that they're still net short, but they're just increasing some long positions. Well, this past week, as you can see, we did go up, and the thing is that whenever it did go up, it didn't go into any optimal trade entries, that you would think would happen. Those happen throughout the week. Those would be more like if you added a fib right here. Your optimal trade entry was obviously right here, from this high, from this low, whenever this spiked up right here. Let me see if I can pull this up a little bit closer for you guys to see if this thesaurus thing will not get off my page. This level right here was definitely the optimal trade entry, so it ended up being somewhere around 1.19200 and 1.1918, somewhere around that level, and that would have been the optimal trade entry for it to go lower. Now, since it did go lower, the best optimal trade entry from that point, throw another fib, especially since it started going lower. And what I did is I took the fib from the beginning of last week up until the end of last week, and it retraced right in the middle of the week, right back up to optimal trade entry, which everybody saw probably around that 7 point, it got above that 1.755 level, 1.76 level, somewhere around there. And that was definitely the optimal trade entry for it to continue to go lower. Now, the thing is that with, the commercials, they probably have made money on some of the positions going short here, but now that's where that retracement comes back in, and now they're going to be looking to even go lower, which is why I have some of these green boxes mapped out. I think that this is going to be the next area that they're going to be heading for, and then after that they're going to be heading toward this area. And the reason I think those two areas is because of the fibs that I have pulled based on where they started going short on those positions. Like I said, if I went from here to here, as you can see, to make it an actual double of that position, your -1 position would be in this box, and to actually make money on that position, you would actually have to get below that 0 level. So That's why I think here is when they're starting to make money. They're starting to light up on their shorts, starting to go a little bit long, but they actually won't make any money until they get below this level here, and it probably won't be until around here, I don't think, until they actually start, the commercials anyway, start actually making money on those net short positions, because they've been net short for so long. They're going to have to go a little bit deeper to make money. So my long-term outlook on the Euro USD is that it is going to go lower. One of the things I can kind of go around that basis is if you look at the 10-year yields, and you look at the German yield, it's actually yielding a lot lower, and there's a little bit of divergence, especially here toward the end. If you look at the 10-year yield for the this is up at the top is the US 10-year yield bond. Here is the British 10-year yield, and then down here is the German 10-year yield, which is generally based off the euro. All right, so as you can see, here, within the German and the they're all kind of moving in the same direction. Here there is the highest high, except for here. In the German, they kind of seems like it didn't really make a higher high. It kind of seems like it was almost generally just as high as these over here. So there's a little bit of divergence here, and plus these seem to be kind of kicking up toward the end, right, as to where the euro seems to be, or at least the German bank anyway, seems to be kind of be diving off. So there's the divergence there in the 10-year euro bond, which tells me that the euro is in fact going to go a little bit lower. So that's why I have mapped out the euro to be going out quite a bit lower. And now the question is, where is it going next? Well, let me move that back. So let's take a look at, let's get a little bit closer in on the 4-hour. And what I want to do is I want to see what's happening, because right now we have just started the day. We are in the Asian range. And so I want to see what this Asian range is going to do. I want to see where the low of this Asian range is going to be. If it's already made its low, cool. But I don't expect it, especially to get as high as it did. It may get as high as it did last week, but I don't expect it to. If anything, what I would expect it probably to do is that, especially since in here, let me see here. Why is there such a discrepancy in these? There we go. That was meant to be there. I moved that on accident somehow. Anyways, whenever this came and traded up, into this bullish, or I should say bearish. I forget what you call it now. Order block. Here you go. It came up and traded in, even though it kind of consolidated here. This was still technically an order block, so whenever it came up, it still hasn't hit this order block, but once it did come up and hit the order block, it rejected right back down. So I really don't expect it to get much higher than this level here, this 1.7600 level, 1.7700 level. I don't expect it to get much higher than that. I want to see what the low is going to be, because then what I think is going to happen is I think we're going to be able to place a fib between there and, well, should be the opposite way around, I think. Or maybe not. No, it should be this way. Some kind of fib like this, and if we can pull this up and then maybe zoom in a little bit, I think we're probably going to see somewhere around the London Open. Maybe not, because I feel like this is setting up already for the beginning of the week. It may not, though. It may take until Tuesday to develop, but I think this could trade a little bit higher, going up into the 7.500 range, which I think seems to be almost exactly this 70.5 fib retracement. Yeah, that's if you're going from wick to wick. I like to go wick to wick on 4 hour. If we're going from hour to hour, I usually try not to do wicks because there's a lot of bodies in between these. But if we're not going from wick to wick, this 70.5, still somewhere around this 1.748. I still think it's going to end up around the 7.500 level before it starts trading back down. But I do think we are going to see a little bit of a pullback because, again, they are still net short. They are going to end up wanting to try to pull back up into these ranges up here. That way they can add more net shorts in. That way they can make more money on the way down. They're not just going to slide all the way down and make more money. They're going to have pullbacks and make fake people out and make people think it's going to go up. But the general direction of the EURUSD is that it is going down. The question is what is the next move? And I think the next move is probably going to be during this already early week of the London session. And I think it's probably going to hit somewhere around the 1.75 level. And then it's going to start trading down from there. And then we'll just have to see how the rest of the week progresses out. Again, that's just because of what I see of divergence in the euro or in the the German banks and whatnot, and also because of the commitment to traders report. They've been going short on this for a long time. For them to make money, it's going to have to go south. So that's my outlook on the EURUSD. I'm not really representative on levels or anything like that. I'm more or less knowing the direction. I think it's up to us to find those setups for that trade, and I think I'm giving you a pretty good setup for the next trade. Again, finding the lowest of the Asian session. This might have already set up on Friday. Because it looks like the lowest that I got on Friday here, if it pulls back up into maybe even the 80% of the fib, you're still looking at the 7.5 level. Either way, I think it's going to retrace back up into this level. It may hang around this level for a while before it comes down, and then I think it's going to retrace again for the London or the New York session, and then go back down again. And then we're probably going to see a kind of a continuation of that throughout the week, until it eventually we're going to see just one strong leg that's eventually going to bring us all the way down into here. And then I think it's probably going to consolidate once it gets down into this area. Or, it could consolidate once it gets down into, this -2 area here. And then it could come back and hit, a bearish order block and then retrace back down. But that is definitely what I believe is happening with the EURUSD. Pound, however, well, and also if we check out barchart.com, we check out the interest rates. Interest rates seem to be a little bit stagnant. They did drop off at one point. If I can pull this down, that way we can kind of get a look at these. They dropped off here, which would, signify a buy, which we did get the buy. So I would think the interest rates would go up probably fairly soon, to probably signify a sell. So I would be watching these interest rates probably on a daily basis, because that interest rate, whenever that did happen, was back in the consolidation period, probably about 3 weeks ago. And that's when it dropped off. And when it dropped off, we did definitely see the buy, and that buy did happen earlier last week. So that's how long it usually takes for, interest rates to take effect. But as you can see, the COT report is definitely showing that, the commercials definitely are their shorts have maxed out, especially once it got to the very top, right here. They're definitely the shortest that they were, and now their shorts are getting less and they're adding more longs. But again, for them to cross over to add more longs, they're going to have to make money off those shorts. To make money off those shorts, they're going to have to get again below those levels from where they first started shorting, which was back in the beginning of March. So this level here. So for them to actually make money, it's going to have to be definitely below this 1.48 level. Probably somewhere around in here, but it's going to take some time to delineate to get there. You know what I'm saying? So there's first level. I think this is going to be the second level before they actually pull an actual profit from from all those shorts, and then they're going to start building longs, and then it's going to go the other way. Let's check out the British pound. On the other hand, it's like the exact opposite. The British pound, I'm actually on the 15-minute. I should probably pull up the daily. If we pull up the daily, we go to auto here. As you can see, the COT report, they had their longs, as they should have, going into the long session, which for some reason the large speculators were shorting, but then they just increased their shorts right around this area here as it was going up. So as you can see, as they increased their shorts, as it got below the shorts, they started decreasing their shorts and increasing their longs. And well, actually they started increasing their longs right around here as it was getting shorter, increasing their longs. And then just before it crossed over to where they were more net long than they were net short, they had built up all their long positions all pretty much of last week, sitting at the bottom here. So this was all of last week, the GBP, whenever it took that huge hit. So you can see as it was falling rapidly, the commercials were buying it up. Because they're expecting it to go higher. So as you can see, they did go net long. And if we take a look at what happened during last week, I found this interesting because I kind of called this. I actually have some daily resistance levels on. I have the long goal here. I think they're going to end up trying to shoot for this level here. As a early term goal, I would say let's just go this to an institutional level, 3,200. As you can see, they built up all their long positions down here, and I don't believe this was the beginning of the week. It was actually right here. Yep. So this was the beginning of the week. It took off, and then I knew there would be some kind of retracement back into here. The interesting thing is that whenever they were starting to short this, it was back on August 11th or so. I want to say it was, well, this is July. Well, this is April. Where am I at now? Here we go. It was August 11th through the 18th, I know, is when it started its switching over. Yeah, there it is. So you can see the COT report down here. August 11th through the 18th is when they started switching over from their longs to their shorts. So what I did to try to figure this out as to where the retracement was going to be is I took a fib, and I took a fib from the where they probably started shorting, which is probably August 18th, right? The highest point around the area, right? And I drew it all the way down. Well, I should probably go the other way because that way doesn't make sense. So I'm going to delete that really quick. I'm going to pull it from the very bottom of one of these areas. I'll refix that. We're going to go to August 18th to probably the highest point, and we'll go here to the lowest point. Now, here, let me get rid of actually some of these lines so it doesn't look so I can redraw these later. It's no big deal. And I'll redraw that too. But let me draw, and actually let me spread this out and push this over so that we can all just see a chart. Okay, so if we were to just draw something from right around here, again, I'll fix that to right around here where I put increasing their shorts. Well, it was that week of, so it doesn't really give you a time frame. They just tell you the week that they actually started increasing it. So you can see they're starting to increase their shorts. Of course, they lessened it, added some long positions, but then they increased their shorts again. But this is when they first crossed over from long to shorts. So if we're going to draw a fib from there, and then we draw it down to here to where they started building up all their long positions, they needed a retracement, right? They needed a retracement back into that level before they went long. And as you can see, that retracement level was perfectly right at that 0.8 level. So this, especially when it happened this week, I don't know how many times it hit that 0.79 level before it would take off, came down, hit that 0.79 level, took off, came down, almost hit that 0.79. So you can tell every time they're coming back down to this level, this 0.79 level, whatever this institutional level is, it looks like it's 0.28200, which I'll just go ahead and draw a line in there, and we're going to put 0.28200. Anytime it gets around to that level, you can definitely tell that they're going long from that level. Sorry about that, folks. Had some technical difficulties. Anyways, let's check out this chart again. So anyways, yeah, as you can see, like I said, as they were coming back to this level, they were definitely adding more longs, right? So, which tells me that since they are also net long, right, they're going to be going longer. So my outlook for the British pound versus a dollar is going to be much longer, probably, than what this area is up here whenever they increase their shorts. I don't really have, I guess you could say, a good institutional level for that, except for maybe 1.360. I think that would probably be the best institutional level that you could probably be going to, that's just above there. Or maybe not, you know, it could be 1.320 before it turns around. But if you take a look at again at the 10-year yields from the US between the UK, there really isn't too much of a divergence, so it just kind of tells you that they're both going to be going in the same direction. I still think it looks like we're going to be going down as far as the US dollar is concerned. We're not seeing much of a rebound from that. If we go to, you know, the dollar right now, you can see it's already started off in you know, a downward motion, and I already have my daily levels here. you know, as you, well, at least the daily, you know, support and resistance levels. It looks, you know, when we actually got in between, you know, a good area, because we stayed below this resistance level for quite some time. Took us a while to get out of it. We did get out of it, and we got above this. I mean, we kind of shot above this, you know, this, what turned support for just quite a, you know, a couple days, but then it went right back down, and now we're kind of in this middle phase here. But it seems like we could be slipping back down into, you know, maybe kind of slipping down toward this support level as far as the US dollar is concerned, which is going to be, you know, as far as the British pound is concerned, this seems to be on a kind of on a roll. If we take a look at, you know, the currency indices here, if we look at the British pound, and we look at it on a daily basis, it's kind of following along the same pattern, you know, as what it's supposed to be. And it seems, you know, to be a little bit more promising than the dollar is. You know, it seems to be definitely more bullish, as to where the dollar seems to be a lot more bearish. So there's where my my analysis comes in for the GBPUSD. Again, the central banks do have long positions on them. Again, it keeps coming back and touching these institutional levels and then going long. They're just adding long positions before they take off is what's going to happen. Now, what's going to happen going into tomorrow? Let's see if we can look down into this. I think the Asian range is probably going to play a fairly good role, I guess you could say, into this. Excuse me, I know I'm not supposed to be smoking while I'm on camera, but whatever. Very unprofessional, but I'm not a professional. This week's episode brought to you by Red Bull. Usually it's NOS or Monster, but I went all out today and I bought a Red Bull. So, Asian range looks like it's already created a high. And as far as that fib is concerned that we've laid out from, you know, August and up until last week, you know, it's still at that, it looks like it bounced off that 0.62 level, which would be, you know, optimal trade entry. But if we wanted to go back to, you know, midnight on, looks like Thursday going into Friday, could have been an optimal low. Before, you know, it decided to take off. You know, still building these low positions down here. I still think it's probably going to come back down and grab another low position before it takes off. So what I think we could see is possibly, and here we go, we have a confluence of that 0.62 level and the current 0.79 level. So if there's a confluence there, I'm almost going to guarantee you we're going to see this pull back down to this level. It looks like it would be an institutional level of around 2.865. Yeah, somewhere around there. 2.865, I think, is where we're going to see it pull back to. Just because of the confluence of both this, you know, that's optimal trade entry for that all-time August until last week, up until last, you know, Friday, up until the high of the Asian range, confluencing together all in one line. I don't see why it wouldn't pull back into that level. Maybe over London Open, it could happen, you know, at New York Open. London Open, you never know, it could raise up even higher. I don't expect that to be the case, though. You know, I'm not exactly 100% sure. I don't have a crystal ball, but I do think that it looks like from what I've seen so far, this would definitely be another optimal trade entry for another long position before this thing finally takes off and gets up and out and over this 50 range. Because so far from that fib that we've had, back from August up until last week, it hasn't got outside of the 50% range or halfway above that fib level. So I think once it gets above that, then we'll start to see a little bit more movement upwards. And then again, like I said, I'm not exactly for sure where we're going to be going with this. At least probably, maybe the 3,300 level or more probably this week. That's just my personal take on it. I think we probably could see quite a few hundred pips, just because of the switch that we did have of net shorts to net longs, that we did see within, the last week or so. So as you can see right here, these are all the net shorts that we had. And then all of a sudden, boom, turned net long on September 28th. All the commercial banks just decided to, well, they definitely were throwing in their long positions, and that's for sure. So they're putting in their long positions here. I'm expecting it to go way higher. That being said, Euro GBP, I think we can say, since one's going one way, we can definitely tell which way the other one's going, right? If the euro is weakening and the pound is strengthening, we're going to see the Euro GBP drop. Where it's going to go, that's a good question. They're thinking about there is no COT report for the Euro GBP. COT reports are only for crosses with the dollar. So these I would just have to take a look at and try to find some kind of confluence in between some highs and some lows, some daily resistance and supports, and draw some fibs to see what's going to happen. Like I said, I do think we're going to see retracements on both, which means I think that the Euro GBP will probably end up going a little bit higher, probably up into this 91.1 level, before it retraces back down. And let me see if that's an optimal trade entry on a fib retracement. Let me move this again out of the way, and let me throw some magnets on this. And it looks like maybe not that support level, maybe the 91,200 level. I think probably trade somewhere around there before it decides to start going lower again. But again, I think they're gonna start building these positions, especially as we do see the euro getting lesser on its shorts, the GBP adding its longs. I think so. The Euro GBP, we're definitely going to see a decline in that as well. Especially now that it's non-farm payroll week, we don't have so much, instability in the market. However, this is leading up to the election. I think the last 2 weeks, definitely the week of the election, the week prior to the election, there's probably gonna be a ton of instability. So I think if you're gonna get your trading in, getting in, probably the next couple of weeks would most likely be ideal. With the president having COVID right now, the markets are going to be definitely unstable. So just tread lightly. I would say you do paper trading. That's what probably I'm going to do. I don't even know if I'm going to even trade, just to see how price reacts. If I go to gold, right, there is a COT report for gold, right? However, the banks are just bearish on gold, and they have always been bearish on gold, which is dumb. Gold is definitely a commodity that is not to be messed with. And I think I don't think that this almost 2100 level that we hit is the height that we're going to see it, especially with the instability that we're seeing. I definitely think that we're definitely going to see it rise. Interest rates here lowered a little bit just before that huge jump at the end there. Remember when it kind of made that funnel shape, and then all of a sudden it jumped up? Interest rates lowered just before that. So you kind of see that buy coming just by looking at those interest rates. But the interest rates have kind of been stagnant. They did just kind of lower recently, but not too much to make an effect. You could see some more buying out of this since the interest rates did lower. So I would think that gold would be going higher this week. How much higher, I'm not 100% sure. It's still below some daily resistance levels. So I am on a 15-minute chart right now. I do want to go to a 4-hour instead, because here I do have marked out my daily resistance levels as these orange dotted lines here. So it's going to be tough for it to get across this daily resistance, but I think once it does, it's going to stay above there. Just because I think there probably is going to be some weakening of the dollar, and that'll probably strengthen the gold market for sure. Again, there's really no way for me to do like some kind of fib extension or anything like that, like I have with others based on the COT market, just because the commercials have been trading, gold as a short for a very, very long time. I would say your best thing to do would be to watch these on, like 15-minute entries. Try to find some kind of pullback. The thing with gold is it's the hardest to trade for me, just because I'm never 100% exactly for sure where it's going to go. Because I could sit here and pull a fib right now, and it looks like we do have some kind of confluence on here right at this old 50 mark. And when I say this old 50 mark, I mean I pulled a fib from whenever it stopped going sideways back in September, I want to say, or no, hey, this is May. Stopped going sideways back in May and started going upwards in June, right? So I pulled the fib from the bottom of there all the way to its height, right? And so now we had just recently got below this 50 line. It didn't really reach like an optimal trade entry to where it would get near the 618 or the 71, unless I just pulled the fib from the wrong spot. But I mean, if you're looking at one of the lowest lows to the highest high, which is what most people do, or you could go from the most explosive low, which would actually probably be this one here. Then we were looking at a little bit more of a confluence there, because that is touching that 618 level there. It's got at least getting close enough to it to where you could see probably some smart people building in some long positions. And as you can see, it did take off from that long position. So that might actually be the more credible fib level, would be this one right here. Let me put this on some magnets, that way it'll stick a little bit better. There we go. And I'm going to lower this COT report. This other indicator right down here, I have found it was open interest stochastic money flow. I find this to be very, very insightful, because it not only is like kind of act as a stochastic RSI, but it also it intakes the money flow index, and also considers the open interest rates as well. So it includes all three, and so it acts a stochastic RSI based on all three of those. So it's an interesting way to see, your momentum and how it switches and how quickly it switches too. And it's pretty dead on. So if we want to take a closer look at, let's just say these past 2 weeks, going back to, I want to say, what is September 18th or something like that. So here was, 2 weeks ago, and then 27th, 25th, this was last week right here. Well, if it would actually draw the line. Oh, geez. Sometimes this thing, I swear, it just doesn't want to agree with me. Whatever, close enough. There it is. So last week to this week, and then here it shows you where those stochastics and the open interest rates both cross. So it gave you a sell signal. It was a good signal. Here it shows you where those cross again. It was a buy signal. Definitely, depending on when you caught it, was a good buy signal. Right after it was a sell signal. Again, a good sell signal. But then again, it didn't actually give you another good buy signal up until here. So you got to be careful kind of with the stochastic open interest rates. I would definitely check out the interest rates versus the stochastic, and not necessarily use this as a perfect tool as far as trying to catch those signals. But so far it is pretty close on. With the thing I thought about this was that the interest rates were going down, so the interest rates were going down, meaning that it is going to buy, just because whatever they have built in this, this blue line here, I think it's like a D plus or something, if I can get it to pop up here. It's not wanting to work for me. Okay, there it is. This is the K line. Whatever this K line is, whenever it crosses the D line, that is basically your sell signal. One of these is I want to say it's the D line, is the interest rates line. So again, I wouldn't put 100% faith into one of the lines crossing over to the other as a signal. Just know that one of these is the interest rates, and I believe it is the D line. As the interest rates are going down, you are going to see more buying action happening, and that is definitely what happened here. So that's why I do like this indicator. I don't necessarily use it as a buy or a sell signal. I more than likely use it as more of like the money index flow, crossed with the interest rates. So as long as you know what the interest rates are doing, you probably know what's happening with the actual buying and selling of the commodity itself. Lastly, I want to take a look at is the USDCAD. Again, I'm on the 15-minute chart just because I was looking at it closely before we came on here. If we go to the daily, what's interesting is that we had the commercials. Didn't mean to move that. The commercials, right? Longing this for quite some time, right? They even opened up their longs, shortened their longs, and as you can see, they were just adding long positions, and then all of a sudden, boom, it shot up. So they were correct on that, and as soon as it shot up, they added all their short positions, right? So they probably, the reason that they're so net short on all of this is because all of their short positions are probably just hanging up right in here. And of course, they probably added some as it backed up into here, and it backed up into here. And, as you can see right here, you can see they got into less short positions because it did, make a little bit of a jump back up. That's going back into June. And then recently, it looks like it almost just crossed over. It did cross over into long positions, as their shorts became less and less, and it got down to that very bottom. You can definitely tell they were adding a lot more long positions, adding long positions as it was going up. And then just this past week, what did they do? Added more short positions. So USDCAD also on the fall. Where it's going to be going to next is a good question. So I wouldn't expect, I know we all expected USDCAD to kind of turn around and do this thing to where it was just going to kind of take off and go right back up to where it started right here at COVID. No, that's not going to be the case. I don't believe it's going to be the case at all, especially since they added more short positions. In this area right here, you can definitely tell they added a lot more short positions. So if they switched over, I wouldn't even say if they switched over. If we want to try to do a fib program that I usually always do from the switch. Let's say they have all their short positions up in this area here, and I don't even think this is gonna work because it's just so far off. I would say you'd have to go probably until until they added their last short position to where they started making money on the shorts, which I think it would be probably around in this area as they started lessening their shorts. So I would probably add it into here, right? So it looks like what could happen is that you could see a little bit of more of a pullback as they do add in more shorts, because they are going to end up wanting more money out of this. Of course, the commercial banks are. So I would think you could probably see it pull back up a little bit further up into the 1.35 100 level. And then after that, probably another good drop off. As far as the interest rates are concerned for the CAD, let's see how the interest rates are doing. It looks like there was somewhat of a drop off. This is one thing I don't like about this chart. It's hard to maneuver on bar charts. You can see interest levels did drop off, which is going to indicate a buy signal. Right, it did take a little bit, but it a couple of weeks maybe. But once those couple of weeks came in, that was that buy signal right there. So once the interest rate drops off, give it a little bit, you're probably going to see a buy. And then if the interest rates go back up, that's when you would anticipate a sell. So since it is still a little bit lower, I do still think, like I said, there probably is still some more buying action in the USD CAD. I don't think there's going to be much left though, considering there is already short positions being added. Again, probably going to be a little bit more of a retracement back up to this 35 100 level, maybe even the 3600 level. I'm not entirely % sure, but I would definitely think somewhere in this. Let me draw a box. Let me just draw a box where I think it's going to go. I think probably somewhere in between here. We should probably see a dollar CAD retrace to before we see another sell off. So if we wanted to draw a path, boom, there we go. Maybe back down in, touch it again, and then a little bit lower, and then, well, just end it here. Just because I drew the fib for it, I think that's where it could go. And I think, I think once you use the extensions, the 272 and the 62 100, those are usually the extensions that I have been taught, especially from, I give all my credit to who I've been learning from, the Inner Circle Trader. That's where eventually I think the dollar CAD is going to go. I don't think don't think we're going to see a huge turnaround on this. As you know, everybody thought we were. We thought we were just going to take this, see this thing take off and run for the moon. I don't think that's what's going to happen, especially when you look at it historically. What happened here was a huge, freak of nature. The whole COVID thing happened. It's going to get back down into about normal prices. And as you can see historically, it has dropped down to these levels. And it's been around these levels. So, for it to go down to, 1.2200 is not entirely a crazy idea. That's actually not too far-fetched at all. So don't think I'm not going to count my blessings on the dollar CAD rising. I'm actually going to think it's going to retrace a little bit, and then I'm going to expect it to go back down. That's pretty much all I got. The only thing I maybe wanted to take a look at is the SPX. The thing is that there is no commitment to traders. I really haven't found a good indicator for this, as far as maybe this money flow and this open interest money flow index goes. Maybe I could take this off others and put it for futures, and maybe that may have something to do with it. But as far as I can tell, we are definitely still in retracement mode. It looks like we could be in retracement mode for quite some time, maybe at least for the next couple weeks. I could definitely see this thing fluctuating quite a bit. If you have a strategy, I definitely have a specific strategy whenever I go into these. There was a couple that I had that I made some money off of, but I had to get down and dirty into the 5 minute, 15 minutes, just so I could, see what was going on. One of these had to do with, the open. This right here was when President got COVID. Which was interesting because the opening of the day on was right here on Friday, and I think we all expected like a huge sell-off, but instead we didn't really get that. We got we got it all the way up. It came back, it touched support, and then it rallied up. The thing is that it didn't get any higher than this line right here. Well, actually it probably did get higher than that, just because today, let's see where the cutoff is. There's the cutoff. So it did kind of come back down. It looks like it's already back up on its way up, which means usually a confluence of the dollar going down. As we can see over here, the DXY is definitely going down. So so since we do see the DXY going down in most charts except for the EURUSD, I think we could see a rebound in some stocks. I think what we're probably going to have to watch out for is those opening and closings, and see what is going to happen. Let me add in session breaks here, as well as the opening and closing in New York, or opening in New York, because the closing in New York is already in there. See, as you can see, if it doesn't break the high, the previous high, the overnight high, generally it's not going to go past it. But if it does break the low, right, then that's when you're going to see more than likely a continuation pattern for it to go lower. And I think this was one of the ones that I wanted to refer to about that. Maybe not. Yeah. So as you can see, the overnight low between here. This was on the 29th. Session opened, it got to a swing high, it went lower. As it got lower, it did break this overnight low. And my computer wants to bring up the dictionary for some reason. Give me 1 second, folks. My computer is not wanting to act fun. Oh my god, this thing is killing me now. Okay, I think it may have actually stopped being retarded. So I'm going to double click on this, that way we can get rid of these indicators. As you can see, this overnight low from, see, here's the end of New York session. Here is the Asian low, right? Or it could be the London low. I'm not 100% sure. Let me see what time it is. That is the London low, right, of the S&P. All right, we start the New York session, it goes higher, it goes down, it hits the London low. The thing is, on a 5-minute chart, right, if I can zoom in and it not be stubborn like it has been. If it breaks this low, overnight low, in between sessions, right, and it closes, it's going to go lower. There's just no doubt about it. There may be a retracement higher, which it looks like it broke lower. There was a little bit of a retracement higher, but then it definitely broke lower again. And the next place that you would expect to see it hit would probably be the next resistance level. This definitely wasn't, well, it looks like this was a resistance level. It looks like it even broke below that and stayed in between. I don't even know what this green line is. I'd probably have to go back a long way, but if that's the 33.28 level, that's like an old support level. So it looks like it hit the top of that and then decided to retrace back up. But anyways, back to the point at hand is that if it's going to break, a session low that happened before the New York session, it's going to continue to go lower. How much lower? Usually look for a previous support. But if it breaks that 5-minute and it closes, yeah, it's probably going to retrace back up. It's not going to stay below that. But generally, if it breaks that 5-minute, it's going to stay below it, and it's going to stay below it until another support level. So, and the same goes for a high too. If it would have broke, I mean, this was a session high. I wouldn't even say a session high. This is like, early New York Forex time. But if it would have broke this high here, on a 5-minute chart, it probably would have pulled back a little bit and then went higher. And I think that's what happened one of these days. This isn't looking like it, because this is where it just continued to keep going high. So let me see if I can find example of this, because it happened at a really weird time. I think this may have been it. Here's 8 o'clock. Here is 8:25. So and here's the thing: here's the low, right? It did break below the low, but as you can see, oh, come on, computer, stop being so stubborn. It didn't close below the low. The closes were actually just about the same. So since that was the case, it took off the opposite direction. Now, what did happen is that previous session, here's the previous session high. It did close above this previous session high, right? What happened after that, it retraced a lot, but then it went higher. So that's what you'll get on these, and especially on the SPX. You'll see that a lot. If it doesn't break, a session below it, then not the New York session, but London session, Asian session, if it breaks a low or if it breaks a high, it's gonna continue going higher. It's, for some reason, it's just been the rule. I don't know. Every time I've checked on one of these, it's always happened. Like I said, here it may have broke the low, but didn't close. Here it breaks the high, but it also closes on a 5-minute above the high. So since it closed on the 5-minute above the high, again, expect a rate. Not always. Like the other one you saw, it wasn't a huge retracement. This one retraced immensely. But then after it retraced, it decided to go a lot higher. What I'm guessing what happened here is that this is probably an optimal entry level. So what I'm saying by optimal entry level is that we could probably take a fib from the beginning of here, right, and go to here. Here it is, retrace back into that 70.5 level, and then continued on. So this is a perfect example of that happening, of the low, of a session happening prior to the New York session, it not breaking, right, it creating a high that was above the after the London session. And then what's it going to do? It's going to retrace back to an optimal entry point. And after it traces back to the optimal entry point, what does it do? It hits a sweet spot, the 0.62 level above. See, unfortunately, it didn't break, it didn't get to the pivot point, but it did get to the 0.62 level. The first point it did get to was the 0.72. Retraced back after that, went back up to the 0.62. So the reason that I have these fibs here is that because these are generally where they retrace to. These are institutional retracement levels. And this is 100% proof that, these are the levels that they are. Again, draw that fib from there to there, traces back to optimal entry point at the 70.5. It gets to both of those retracement levels. So anyways, that's all I have for this week. I hope this was insightful. If you have seen my videos before and you like my videos, you can go ahead and hit that subscribe button. That would be cool. If anything, like the video, tell people that I'm out here giving you guys some good information. Share the video if you can, but hopefully my insights of the commitment of traders report, that's been helpful to me, the open interest rates, the 10-year yields, those kind of things are things that you have to look into as a retail trader to understand the direction of the market. Before you can just go in here and say, oh, it's going to go lower, it's going to go higher. I don't believe in channels. I don't believe in trend lines. They're all meant to be broken. This game is played by large banks, and we have to abide by their rules. And if you don't abide by their rules, you're not going to make it in this game. So by understanding how they play, which is why I look at the commitment of traders, just why I look at the open interest rates, they're going to be paying attention to those. And if we're not paying attention to those, we're going to be left in the dark. So, and I hope I'm right on these things, and we'll see hopefully later in a couple days, maybe later this week. Maybe I'm completely wrong, and you guys can tell me to shut the F up and that I shouldn't be listened to. And if you guys want to do that, hey, I'm completely cool with that. But last week I wasn't wrong on the GBP. I knew it was building lows, and I knew it had a certain retracement point. I thought it was honestly going to take off this past week. I didn't expect it to come back and repeatedly bounce off that level, but it did, and now I'm expecting it to take off, that's for sure. But we'll see. And I haven't, if you follow me on TradingView, Tedzily, I'm Tedzily on TradingView. You can see my idea that I posted on Monday, and you can see that, hey, this is going to be the level that it's going to retrace to, and it's absolutely there. And you know what? Just for giggles, why don't we actually take a look at that? Let me go ahead and pull back the charts here, and we'll go to my. This was a trade I called that was actually bad. I thought EURUSD was actually going to go a little bit higher. I wasn't understanding that that the retracement, the high that it had made, was actually a retracement back up into that institutional level. But the rest of them actually were fairly good. EURUSD, long-term GBP. Here we go. So here's where I was talking about the GBP building longs because of the COT report that I had called. This was Monday, right? If we can zoom in, you can see that is the Monday that it happened. I put right here, this is the retracement level for the entry. Here is the box I had drawn out, and if we extend the box, there is exactly where it retraced to. So like I said, I was right about the GBPUSD coming back to that entry level. The thing is that it hasn't, I mean, it has gotten higher than that high on Monday. I'm just expecting it to go much higher, but then again, that's all I got. I'll be uploading this soon, and hopefully I can give you guys updates throughout the week. I know I've only been doing them weekly. That's just because I've been sticking my head into videos and learning a lot, and rather than putting out videos. And that's because I want to bring out the best information that I can to you guys. So you know, I think maybe less videos and better information is probably going to be better for you guys, rather than more videos and, you know, sporadic information that could actually mean absolutely crap, you know. So I'd rather bring the good information that I've been learning, and hopefully you guys get that information, you can learn something from it. So that's always from me. Again, I'll try to have some more updates. If not, I'll probably be learning more and try to find some sniper entries. Again, follow me on TradingView. I usually throw my ideas up there, and especially when they're about to happen. And maybe we can catch some good pips this week. But again, these next 2 weeks, I probably will be trading. After that, I'm probably going to fall off a little bit because there's going to be a lot of volatility in the market due to you know, the election and civil unrest and all this stuff. And you know, I'm not saying one person over the other. I'm just saying I hope we all come out of this just cool, and that we all can get along. That's all. But as always, thanks a lot for watching, and keep your pants on.